Hello everyone, thank you for joining us at this Your Overseas Home webinar. My name is Abby Young and I am an account manager here at Your Overseas Home. Today we will be chatting with Malcolm McDowell from Chase Buchanan Wealth Management about your financial considerations when moving to France. It's great to have so many of you here with us today, whether you're watching live or on demand. Once Malcolm has shared his presentation, we'll open up the floor to any questions. If you have any as we go along, please type your questions in the questions tab. You can find this on the right-hand side of your screen. We do hope to answer as many queries as we can today, but if we don't get round to them all, please don't worry. Any unanswered questions will be forwarded to Malcolm and the team at Chase Buchanan. Before you start off with your presentation, Malcolm, please can you introduce yourself and what Chase Buchanan does?
Yeah, absolutely. So my name's Malcolm McDowell. I've been a financial advisor overseas now for 20 years. We are a MiFID regulated advisor in the EU EEA space. And we help people with everything from lump sums, becoming tax compliant, reducing their taxes, mitigating their taxes, helping with pensions, helping with investments, helping with regular savings, life cover, all these sorts of things. But basically helping them do that move and helping them make sure that there's no sort of catches along the way when they make their move. You know, I've lived in 8 different countries now. Only came back to the UK just over 4 years ago. So everything that clients are about to go through by moving over to France, or if they've got property there already and they just want to sort out their taxes and not have any nasty surprises, you know, been there, done that, got the t-shirts, ran away again. So been through it all myself. I can help those people with any kind of issues that they've got and have sort of hold their hands every step of the way and have a sort of a win-win situation if we can do some work for them.
Perfect. Sounds great. You've got lots of experience, I know. Yeah, great. I think we can get into the presentation side of things now.
Okay, lovely. Let's get started. Right, yeah, so I've touched on a little bit of this already. This is just a little bit about us. I won't spend too much time on that. One of the things I do need to cover straight off the bat is licensing. So not all of you, but some of you will be based in the UK still and be looking to be moving to France. You probably have financial advisors in the UK. If you don't, that's fine as well. But if you do, they will be FCA regulated. And just be aware that since Brexit, FCA regulated advisors are now no longer allowed to passport their licenses into the EEA. So if you are going to be a tax resident overseas, it does make sense, or even get a visa in France and not become a full tax resident. You will need to speak to someone like myself who is MiFID regulated. Think of MiFID as like a European license. The markets, which is exactly what it is. It's a Markets in Financial Instruments Directive. And the way that works is you can have it in one particular European country and then passport it in to the other European countries. And of course, since Brexit, you can't do that from the UK anymore. So just make sure when you do move overseas that you're speaking to a MiFID regulated guy, because the FCA guy is not allowed to advise you anymore. Okay. Moving on swiftly. These are some of the things that we do. I do all of these things except for one, which is the US connected persons. I'll pass you on to the guy in our company who does that if you are indeed US connected. And we do get quite a few US residents wanting to be US citizens wanting to move to France. So that has to have a specially qualified guy to do that. And I'll pass you on to him if indeed that is your situation. Okay. We have offices all over the place. I'm back in the UK now, but I've been in a few of those. So we move on. Okay, and these are the things we're going to be covering today. Moving to France, all the things that you need to think about when you make that move, before you make that move to France. Okay, a couple of other things as well before we get started. I do with all the things that I spoke about earlier. A couple of things that I get asked about quite a lot on these seminars and we don't do, I want to make that absolutely clear, is I don't deal with visas. Point you in the direction of a specialist for that, if indeed that's something you want to get some help with. You know, we don't deal with tax returns. That's something that you would go to an accountant for. Okay, so we get a lot of questions about that. We deal with helping people become financially compliant in France and making sure that there's no issues for you, and that you reduce your taxes, increase the amount of money that you make, and all these sorts of things. So that's what we'll be covering today. Okay, so yeah, tax residency, pretty straightforward in France. You either walk into the tax office and declare that you are a tax resident there, or you spend 183 days there, at which point you will automatically become a tax resident there. Bear in mind, just very briefly, tax residency is not the same as domicile. Okay, domicile is a completely different kettle of fish. Tax residency, nice and straightforward, 183 days, or walking into the tax office. Domicile is a different thing. Domicile is more the color of your passport, and where that becomes important for a British citizen is inheritance tax. And we can discuss that at another time, but and we'll touch on it in this presentation. But you still have the right to keep your UK domicile when you move to France, and there are certain advantages to doing that. So we can discuss that, and we will discuss that at a later stage. Okay. Right, income tax bandings. Income tax bandings in France. What you'll generally see with the whole income tax thing and tax generally in France is that it's very Robin Hood. We actually do take from the rich and give to the poor. And this is a theme that you will see throughout this presentation in various forms. It's not as harsh as it used to be. And they have watered down quite a few of these laws lately. One of the advantages that we do have is, in reality, the French don't like paying tax, and so they've found lots of wonderful ways to get around a lot of this stuff that I'm talking about. Okay, so and I will be touching on a few of those as we go through it. The tax bandings, as you will see, start at they have a nil rate band which goes up to just over 11,000. These obviously from the 1st of January to the 31st of December. So they, as I'm sure most of you are aware, they don't have the same tax year. And just also bear in mind, they change on the 1st of January every year. So they go up with inflation, or supposedly go up with inflation. So you're looking at the first year from the first banding there is 11,294. Up to that point, you don't pay any tax. Last year, that was sitting at 10,777. Okay, so it gives you an idea of how it's moving. On the 1st of January. It will go up again. Okay, and a simple Google search will explain what that looks like. Okay, like I said, you're going to see this as we go through. So anyone on higher incomes and joint couples on higher incomes, they slap on an extra tax for you. Okay, it is the Robin Hood thing that we've got going on in France, and you'll see that quite a lot as we go through the presentation. Okay, real estate wealth tax. I'm going to spend a little bit of time on this because us, the Brits, we do like to buy a house or two. You know, we're all Thatcher's children. We all like a bit of bricks and mortar. So let's cover this. There's a lot of nonsense written about this on the internet. Some of it's out of date. Some of it's just plain wrong. So let's touch on this now. You only need to worry about the real estate wealth tax once you go over 1.3 million in the value of your property in France. Okay. And then you're only paying the tax on everything over 800,000. So as it says there, if the net value of taxable property exceeds 1.3, then the first 800,000 is exempt. So you're only paying that 0.5% on the amount between 800,000 and 1.3. And that's an annual tax. Okay, so just bear that in mind. It's not as bad as it looks. But this is one of the things that I've got to touch on as well. This is a notoriously easy tax to mitigate. And there's lots of wonderful ways of doing it. Okay, so a couple of other things to touch on before I come on to that. is bear in mind that if you've got properties outside of France and you turn up in France and you become a tax resident in France, you have 5 years before those overseas properties count towards the 1.3. Remember that. Okay, that's important. So there's no blind panic that you have to sell your properties and all that kind of stuff. You've got 5 years to do something about it. Okay. Another thing to bear in mind also is the wonderful ways that the French have of mitigating this tax if they do end up going over that number. Okay, so if they do end up in a property that's over 1.3 million, there's 5 or 6 ways to mitigate that tax. One of the most, I won't go into all of them now, we don't have enough time, but I'll touch on one which is quite popular with the French, is actually when they're a couple that have a house and it's well over the 1.3, they turn up to the tax authorities and they tell them that they're separated. Okay, so the 1.3 then counts for both individuals and it goes up to 2.6. Okay, you don't have to go through a divorce. You don't go knocking on your door and seeing who's living where and all this sort of stuff. You just have to be separated and then you can bump it up to 2.6. There's other ways of to add to that as well if you're way over the 2.6 as well. So this is not one that you really need to worry about much. This used to be called the estate tax, sorry, the wealth tax, and it got watered down for several political reasons. But that's what it is at the moment, and it's an easy one to mitigate. So again, lots of nonsense and scary stuff written about this on the internet. We can help you mitigate that very, very easily. Nothing to worry about. Okay, movable properties. I need to touch on this because it's a tax that doesn't exist in the UK or in many other places. It is a tax on anything that's not bricks. And again, it's going to be a little bit, that can sound a little bit scary. Let me explain. So let's say you've got a fleet of Lamborghinis sitting outside and you're renting them out. Or you've got some expensive Banksys on the wall which are flying up in value. That's the only time this tax comes in, and then it's going to be a tax on the capital growth or on the income that comes from that property. Now, the reality is, number one, the vast majority of what all of us have in our houses are depreciating assets, no matter what we like to think, and it is a notoriously difficult tax for the French to collect. They don't get a lot of money from it because, as you can imagine, people who do have antique furniture that's going up in value, that's pretty rare most of the time, and it's very hard for anyone to tell that you have indeed have that. So it is a very difficult thing for them to tax. It's a very difficult thing for them to chase up. But I just wanted to make you aware of it because it's something that doesn't exist in the UK. All right. Okay, UK pensions. I'm going to spend a little bit of time on this one because most of the people who come to France have a UK pension. Not all of us, but a lot of us do. So it's important I touch on that. It's a huge topic, so I'm only going to scrape the surface, but I do need to give you a little bit of history about it, so it will give you an idea of what your options are, and it'll make sense then if I give you a little bit of the background. So back in the early 2000s, when us, the Brits, were members of the European Union, we were being bombarded with all sorts of, as were the other countries, all sorts of directives from the European Union. And they were all to do with the freedom of movement of people and the freedom of movement of capital. And that obviously includes pensions, pensions being the biggest investors in the world bar none. So all the European Union were trying to do was make the system a little bit fairer and add pensions into the freedom of movement. Okay, so what that entailed was, well, they realized that people, let's say, for example, someone was in Spain with a pension in Portugal, or someone in France with a pension in the UK. Why you continue to pay in UK taxes? Why do you come under the UK rules? Why do you come under the UK regulations when you don't live there anymore? Why are you paying for streets to be clean, potholes to be filled in or not filled in, and all these sorts of things while you're in the UK? When you're not in the UK, you should be able to take that pension with you. So that was a directive that came out in 2003. Long story short, that became law in the UK on the April 6th, 2006. It's often referred to as Pensions A Day. I refer to it there on the slide there. Pensions A Day. From that day onwards, anyone with a UK pension, doesn't matter what colour their passport, had the right to take their pension with them into the European Union. Okay, there are a number of advantages to doing that. HMRC were quite relaxed about it to begin with, and what they didn't foresee in a million years is that this would mushroom into a massive pensions transfer industry. Not just pensions transferring within the UK, that picked up as well. People amalgamating their pensions, putting them all together, coming out of final salaries, all this kind of stuff. But moving their pensions overseas as well, because there are a number of really big advantages to doing that, most of which revolve around reducing your risk. So I'll touch on a couple of them. We don't have time to touch on all of them today. So yeah, I mean, for example, a UK pension, when you die after the age of 75, you continue paying taxes. Your pension will then pass on to your spouse or your beneficiaries, and they will continue to pay tax on that pension. If you have it in an overseas pension and you pass away, then that pension passes on to your beneficiaries, your spouse or your beneficiaries, completely outside of income tax, because it's no longer subject to UK rules, because the pension is based outside of the UK. Okay, it doesn't matter where your offspring or where your spouse is based. Yeah, it depends on where the pension is based and what the rules are for that pension. Okay. You also got certain Mr. Gordon Brown back in 1997 thought it'd be a really good idea to tax pensions on their growth. He did it the sneaky way by taxing the dividends and yields on pension schemes, and it's a cost of around 20%. So imagine you've got two pensions, one in the UK, one overseas, investing exactly the same thing. Which one's going to grow faster? Yeah, the one that doesn't have the 20% drag on it. So yeah, they keep quite quiet about that. It makes them an awful lot of money. It comes off at source. You don't see it on your statements. So please be aware of that. That's a big one, and a lot of people move it out just for that reason alone, especially if they've got a long time to live, which we all think we do. We all think we're going to live forever, right? So, but it's a big one, even if you're going to live for a few years in retirement. Also, there's no tax at source. So people who try and draw down on a UK pension while they're in France, what they will often find, even though there's a double tax agreement between the two countries, the UK will take their tax off first. Yeah, your pension administrator will go to the tax authorities. They will go to HMRC, and the tax will come off. And often it will be an emergency tax code. And then you will need to make the difference up in France. Okay? Do you know how long that takes? Months, sometimes years. Don't do that. Have it in an overseas pension, the money gets paid to you gross. So again, if you've got two situations, one, the money's in the UK, one's the money in an overseas pension, and you're in France, you take out 100 grand from each of those situations, you'll end up with 60 grand or so sitting in your bank account. If you take it out of the UK, you'll end up with 100 grand if it comes to you from an overseas pension. You then declare it in your country of residence and pay the tax there. Okay, as any accountant will tell you, that's the best way of doing things. Okay, there's a number of other advantages as well. Currency risk is a big one that you take off the table if you have it in an overseas pension. There's loads of others as well. I can't go into all of them today, but that's why there's billions leaving the UK every single year, and HMRC and a lot of the schemes in the UK don't like it. So anyway, that's their problem. If it's the right thing for you to do, you do that. Okay, and that's something that I can help with. If any of you are thinking of moving to the UK and you've got a UK pension, there's a slide at the end of this slide deck. Click on the QR code or send me an email and we'll speak about it. It's all very bespoke. Okay. Let's move on because I can see we're running out of time. Okay, inheritance tax. Okay, so the French inheritance tax is notoriously complicated, but a couple of things to bear in mind. If you are British and you are coming to France, and you're going to become a tax resident in France, there's nothing to stop you from keeping your domicile. So I touched on this a little bit earlier. Your domicile means, in basic terms, your passport. right? So if you've got a British passport and you've got any kind of connections back to the UK, you can easily claim that you have you are UK domicile, a UK domicile, okay? What that means is that you will come under UK inheritance tax. UK inheritance tax is much easier to mitigate than French inheritance tax. French inheritance tax, you can mitigate quite a lot of it, but it takes time and you won't be able to ever mitigate all of it, yeah? Especially if you're a high net worth. If you're a high net worth and you've got and you have a UK domicile where you're tax resident in France, you can mitigate all of your inheritance tax. In the UK, it's a much easier thing to do. Okay, and there's two basic methods: trust and business relief. Okay, so that's what most people are doing. So I can help you with those things. I think there was a famous quote from Lord Jenkin, who was the Chancellor of the Exchequer back in the 1980s. And he said quite famously, inheritance tax is a voluntary tax that you pay if you like the inland revenue more than you like your children. Okay, I will second that. That is something that you can definitely mitigate. You should not be paying that. You just can't do it on your deathbed. If you want to mitigate that tax, you want to look into that, talk to me. We can find ways of doing it. Again, it's a very bespoke conversation. So get in touch and we'll discuss how that works. And then finally, tax on traditional asset portfolios. Okay, so the French came after, or rather they come after any kind of investments which are overseas. So this will include anything that you've got in a bank account getting interest, anything that's on a brokerage account outside France or even inside France. They will come after that with a vengeance. ISAs in particular are something they jump all over. An ISA is not something you want to hold when you're in France. They will tax that either at 30% or at income tax rates. So you get to choose which one that is, but that's an ouch or ouch. Okay, so it's not good. So that's something that I can help with. Yeah, and I can tell you now how that works. There was a product that was set up in 2017 by the French, which will help mitigate that. And it was done by the French because they realized that unless they did it, no one would go to France. So there was a lot of competition with things like golden visas for, over in Portugal, Spain, Cyprus, these sorts of places. And the French realized they needed to do something. Otherwise, people who came to France would just keep their assets offshore and not declare it. So they needed some kind of incentive for that. And eventually, they should have done it decades ago. But anyway, they got around to it eventually, and it was done in 2017. So that's something we can encourage. We can help you with. And they're fantastic. So you don't want to keep ISAs and stuff like that in the UK. What the French will often do is go to the ISA and then backdate the tax to when you started the ISA. That'll be super painful. So don't do that. Get your money out, put it into the French system. Their equivalent to an ISA is a lot better anyway. I often refer it to it as an ISA on steroids. Is a fantastic thing to have. 23 million people in France, that's almost 40% of the adult population, have one of these things. So they're well known, they're common as muck, and we can help you set up a good one. Okay, don't go to the main French banks because they're not very good, and they're a little bit retail and they cost too much. So we can help you set up one of those things. That again, this is not something that you need to worry about, but it's something that we can definitely help with to mitigate those taxes. It will mitigate capital gains tax. It will mitigate some inheritance tax if you come under the French rules for whatever reason, and it will mitigate income tax as well. Not all of it, but a good chunk of it. Yeah, so you'll only pay a little bit of income tax on the growth that you get in one of these things. So they are fantastic. They are the only show in town in France when it comes to mitigating tax on your investment portfolios. And the days of hiding stuff offshore are coming to an end, my friends. Okay, so we have a thing called Common Reporting Standards, which we nicked off the Americans. They had a thing called FATCA when they got fed up with all their Americans not paying tax overseas. So they started going after all the investment companies and financial companies. So they said, right, the individuals don't go to jail. The directors of the companies will go to jail, and we'll slap them with big fines as well. So the European countries looked at that and thought, well, That's a good idea. I think we'll copy that, and that's called common reporting standards. So the idea of hiding stuff offshore, this is all slowly coming to an end now. So so let's bear that in mind. There's no incentive to do that if you're in France, okay, since 2017. So so that's that. And that's pretty much it from me. I don't have, haven't left you much time for questions. Sorry about that. There's so much more I want to get across, and there's so much more to talk about. But yeah, so that's pretty much me in a nutshell. My details are there. You need to get hold of me. Click on the QR code to set up a meeting, or send me an email, or anything like that. Give me a call, or drop me a text. I'm on WhatsApp, and I'll get back to you pretty swift. So that's it from me. Questions, please.
Thanks so much, Malcolm. That was very useful. I feel like even I learned a lot from that. There are a lot of questions actually from the audience. I don't think we'll be able to get through all of them, but I know that you'll be in touch with anybody who asked a question today to give them that information. Annalisa did ask just to kind of understand whether the information you've given is relevant for US residents as well as the UK, or do you think she'll need to speak to somebody else to kind of cover the US side of things?
I will pass you that. Americans are a very different kettle of fish, and I mean that in a good way. The thing is that they're taxed back home and they're taxed on their passports. So you need to speak to a specialist. Now, the thing is that you're not going to find many companies that will take Americans. Yeah, you won't even see many banks that will take Americans outside of America. Bank of America do not take on Americans outside of America, right? For the reasons I spoke about earlier. Yeah, we have a guy who will be able to help you. Any US citizen, just drop me an email and I'll put you straight back in touch with him, and you can speak directly with Alex, no problem.
Perfect. I think there was actually a couple US citizens in here. So for anyone who did ask a question who was from the US, Malcolm will be able to put you in touch with his contact to get those questions answered. I think we probably have time for one quick last question just before we end things. Jennifer asked, is income earned from property rental in the UK taxed in the UK or France? I guess if they were to then move over to France. Yeah,
assuming that you're a tax resident in France, it will be taxed as income as per those bandings that I showed you.
Perfect. Brilliant. Well, I think a lot of the other questions are probably a bit too long to get into and a little bit detailed. So I think we will pass those over.
Yeah, but please get in touch. Please pass them on to me, and we'll set up a meeting and we'll speak. No problem.
Perfect. Well, it's been very, very useful speaking with you today, Malcolm. I personally really enjoyed your presentation. So thank you so much for sharing your knowledge with us. Thank you everyone who joined today and listened in and asked a question. It's been great hearing from all of you. We do strongly recommend that you get in touch with Chase Buchanan directly to discuss any of your requirements in detail. We'll be in touch with their details shortly, and you can also see them on the screen now. But before we finish, I'd just like to invite you to leave us a review on Trustpilot if you did find this webinar helpful. Thanks so much for joining us today, and happy property hunting. And thank you again, Malcolm, for your time this afternoon.
Thank you.
Thanks, guys.